said the Grinch returns, but I know that wasn't what you were talking about. And so obviously days before Christmas, we have lots of news that is market moving. And the reason why it's not making the market move is because a lot of the traders are gone. But a lot of data that's coming out, everything from continuation of the government, and we're going to get into that, to what you meant, I think, when the Grinch returns is the economic data that we got this week.
That's right. This past week, the Federal Reserve, they met, and I think they threw a few people for a loop. It wasn't necessarily that they cut rates by 25 basis points. That was widely expected. It wasn't that they signaled in 2025 they might only cut 2 times. They have no idea how many times they'll cut. Nobody really does, because we have to see what the data says. But, that was, I think, what a lot of headlines focused on. What I thought the real message is that in 2025, some of the members of the Federal Reserve are trying to anticipate or maybe front run a little what President Trump might do in terms of tariffs, fiscal policy, tax cuts. And even though back in November, Chair Powell said that the Fed, they don't guess, they don't speculate, they don't assume anything about policy like that. But yet he said a few of them have started to make some of those guesses.
Yeah, so and that's where they really are. And they look backwards. I mean, that's really what they've said forever, is that they're going to look at the data and then make decisions. And so if they are front running, that is really something that's outside of what they've done in the past. But, I said the market didn't react, but it really did earlier this week. I mean, a significant downturn, not only in the Dow Jones and S&P, but the NASDAQ was down a big number.
Yeah, the NASDAQ was down, the small cap stocks, so the Russell 2000. Right. So small caps and the tech sector were the ones that really declined the most. And I think that's because those are the ones that, if you think about small caps, they're very sensitive to the outlook for interest rates because they tend to have more debt than bigger companies. Now, in terms of the tech stocks, there's also the discussion around has enthusiasm about artificial intelligence maybe gone too far, too fast, valuations. Those are all concerns that kind of linger over the markets. And that's where here at Annex on our investment committee, right, we're focused on what are the fundamentals, what's the outlook for those, and try to make sure that you're getting a fair price for those.
And that fair price just got a little cheaper, right, and could have been an entry point. So if you aren't a client of Annex and you're thinking about what you should do, one, obviously you should talk to us because that's the opportunity. But number two is there might be an entry point right here. But let me go back to a couple of things. The Fed front running is very interesting to me because they haven't done that before. And I don't want to get too deep, but you are a professor of economics, so I want to ask you this question. It's called money supply, or M2 for us geeks, right? That is increasing, and that really foretells inflation more than anything else.
It can, yeah. So there's a number of things that can drive inflation. The biggest one over the long term is changes in the money supply. And there are a lot of different ways to measure the money supply. It's
and
not
how does
just,
that happen, too?
Yeah. Well, it's not just the cash that we use. It's actually more about how it is that you have banks creating loans, which then creates deposits. That's basically the transactions that are used, and that's the money supply.
And that's the velocity of the dollar as well.
Exactly. So if you think about it, you have $1, you spend it, somebody else spends it, somebody else, and the faster that happens, you can get more money supply that way. And what has happened over the last year, maybe 2 years, is the money supply has been shrinking. So as the Fed has been shrinking its balance sheet, and they raised interest rates, it shrank the money supply. But that's beginning to come to an end.
Right.
When we actually look at the data that's as of the end of the previous month, the money supply, based on this measure called M2, which includes like money market funds, checking accounts, that has grown about 3.5%. So it's beginning to turn.
So that graph starting to go up, Brian, means that inflation's likely to follow. So I'm giving them a pass and saying maybe they're looking at the economic numbers and not do what we've read in some of the papers that they are guessing at what they're doing. Maybe they are looking at that M2 supply. And as I looked at that, I felt better because they really are fact-based.
They really are, and that's what we want because it's really easy to politicize them. But really, these are people who they are focused on their mandate that is given to them by Congress to pursue full employment, stable prices, moderate long-term interest rates. And part of that is really paying attention to the data. Now, when they react to the data, that can make them look like kind of these skittish squirrels anytime you get a surprise in the
skittish squirrel.
you get a surprise in the data. But for the most part, when we're kind of looking through those trends, it does make sense probably for them to slow down the pace of rate cuts.
And that really is a skittish squirrel, I think, is different from a red-nosed reindeer, I would assume. But
or the green Grinch.
These are the ones that are in the road, and it's like, make up your mind.
left, right. Yeah.